Hello, people. Right, we're going to go over a short position I took on euro dollar on 8th of July, which was a Friday, 2022. So, higher time frames are actually pretty damn simple on this one. Let's kind of start off with the weekly chart. We can see that we have just broken this major sort of extreme, let's call it a monthly low. Just going to delete that line. So we know where we're at. We know that likely after breaking major structure, at some point, we're going to see a bit more of a sizable weekly pullback, especially as you can see that we've pretty much fallen in a straight line, at least from a monthly or even quarterly perspective. So yeah, at some point, we'll be expecting to see maybe a bit more of a sustained pullback, especially after breaking such major levels. On this data feed, we don't have much to work with to the left, but ultimately, I don't weigh massive importance on super old zones. Recent price action will give me more than enough information that I need, right, to order to read the market in the way that we need to. So yeah, obviously we're selling off pretty aggressively. We took out that major low. We also broke these more recent lows as well. So even from that perspective, we could expect a bit more of a minor pullback into that prior range. But from a higher time frame perspective, especially even when we jump down into the daily, although we say, what's the framework you learn from literally lesson 1 in the technical analysis module, which you are probably sick to death of hearing me saying, after a break of structure, what do we expect? We expect a swing pullback. Whilst that is true, when you have a daily and a weekly and a monthly or even a 4-hour break of structure, price can fall for or continue to move in that same direction for quite some time, okay? So on the daily chart, we have a break of structure here. So the moment that we break that, yes, you can be expecting that we could be having a daily swing pullback at any moment. But that, are you just going to sit there and go, right, I'm not going to take any more short positions? Because you can miss out on hundreds and hundreds of pips to continue selling that move, right? You only have to look at the prior recent daily moves from here. Like we get this break of structure, fall for quite some time, especially this one here, right? We fall for a number of weeks there where you can capitalize on continuing to sell short. So yeah, the point I'm trying to make here, which I think is probably or hopefully quite clear, is that after a break of structure, we can continue to still look for shorts if it's a higher time frame break. I just keep basically following the order flow on the lower time frames until those start to shift bullish. I'm going to keep favoring those sells, right? So that was the daily break of structure. 4-hour chart, just quickly draw it on for you. So we had this break here where we switched bearish, and then we can continue to see those swings. We did temporarily actually switch bullish here if you marked out your swing highs there. But we were aware the whole time, right, we were saying this was kind of that one big push down, and we were at any point that could just be the pullback into these levels of supply to continue the overall bearish momentum, which is what we then got. So we got a break of that low, and then we're now trading within this swing high and this swing low there. But when things are this heavily bearish and selling off with a lot of momentum, like I said, I'm happy to be aggressive and keep following that order flow. So you can see these very minor breaks of structure bring us to where we are within now. So we directed that very small or minor level of supply, I should say, right? Why do I say it's minor? Well, it's valid because it broke this level here, right? But it's just kind of a minor internal low that it's broken. And in fact, this candle here did just wick that low. So, ultimately we do have a level of 4-hour supply that caused a wick break of the low. So not the strongest, but it's supply nonetheless, and something we can be mindful of. So obviously, kind of looking at this, we're starting to fall a bit more correctively. We've just broken that low and retraced straight away. So that was aware of something in the back of my mind that potentially soon we may get that bullish chock, or maybe even a bit more of a convincing IBOS there. But only once that happens, then we can start to potentially look at playing that 4-hour swing pullback. But until that happens, just literally keep following bearish order flow until it doesn't. You just may want to be a little bit more aggressive with your targets. So if you're getting shorts from within here, you may want to heavily partial at those lows, if not full TPs, because it's tricky when momentum is this strong, because you don't know. Price could just literally keep tanking. Sometimes that happens when we get this sort of momentum. But then other times it doesn't, especially when we start to fall correctively and it can start to go. So my approach to these scenarios is just keep following bearish order flow, like I said, at, quote unquote, poorly priced levels. But I'm just a bit more aggressive in management. I'll get in short here, for instance, and then I'll look to take the majority, if not all of my volume off the lows. Does that mean I can leave a lot of profit on the table? Sometimes, yes, fair enough. But that's what works best for me. Anyway, that's the 4-hour chart. Pretty damn simple. So let's kind of draw on our structure. We can see we're obviously falling pretty bearishly, so I'm not going to draw on every piece of structure. I think swing structure is pretty obvious in this instance where we just had that break of structure there. pull back into this nice premium level of supply here, and then had another pretty strong movement to the downside. So yeah, we're trending very nicely. Swing structure is very, very clear. We are now trading between, let's put on our pretty little circles, this swing high here, and potentially we don't know where the swing low is, right, until we start to get a significant pullback. But we do know that we have taken out this swing low here. So this is kind of, what's the time? This is 5 a.m. BST. So sort of towards the end of the Asian session, coming into Friday's European session. So if you come to your desk and you're looking at market structure at this point, I think, it's pretty easy. Let me just go back on the 4-hour chart and just make sure sometimes this doesn't appear on the time frame, which is a bit annoying. Should be there, but it's not. Oh, that's why. Don't know why it's saved like that. So you can see that we have this quite wide level of 4-hour supply. So where it's there, I'm now going to delete it just to kind of keep the charts a little bit clear. But obviously selling from anywhere from in here, following that order flow is going to be pretty tidy. But that's quite a big zone, so let's refine it. Well, most obvious and high probability zone is always going to be the extreme, which we have this inside bar here. As that's quite refined, kind of just, I don't have a set rule for when I will and won't do this, but I'm happy to kind of draw that to the kind of 2 candles there that are then engulfed. Just to kind of, as soon as price comes in here with the M1, I'm more than happy to look for entries from within there. For those of you who trade M15 risk entries or like that more sort of swing approach, this would be, again, a very high probability area to look for that risk entry, right? Setting your stop loss definitely behind the high, and then depending on what rules you have around where you want to set your entry. I'm not going to dig into that for now because that is not the trade that I took or was looking to take, but this is definitely a POI in which I'd be looking for my M1 entry model. Now, another zone that I was aware of and had in my pre-session markup, which you can see in the Discord, was this level here. Now, initially I had the zone just drawn on, kind of reined in like this on my markup. And usually when I do that, it's usually because it's a zone that I'm aware of and I will dig into it or monitor price action if and when price approaches it. But on first looks, I don't initially consider it to be maybe a very strong or prominent zone. I don't initially expect that price is necessarily going to form that swing lower high here. And the reason why, or when I first kind of did my pre-session analysis, was, well, this kind of just looks like one pretty much straight movement, a bit of a pullback there, and then a straight push down. So for me, it wasn't really that significant. It kind of just looked random in the middle of the leg. Typically, you'd see a bit of a pullback, and then a bit more of a move like that, and then I'd be a bit more typically interested. But I could see that, it flips this level here, this fractal level of supply, those sell to buy wicks. Price obviously came into that level, pushed up, and then pushed down. Okay, so it's definitely a point of interest that I'll keep an eye on, especially as well. You want to keep your eye out on dojis. Typically, they can be supply and demand zones that will provide a reaction. And if you look at the candle, if you have your cursor on the candle, and then you look up here on the top left, just move those candles out of the way, you can see that the open price was 73.3 and the close price was 73.3. So yeah, basically not quite a bullish candle, but almost. Okay, so yeah, it definitely meets all the rules. It led to a break of structure, so definitely something you want to be keeping an eye out on. Obviously, we also have this level of supply here, but it's pretty poorly priced. So I'm just going to speed price up to just where we came towards Frankfurt Open, so around 7 a.m. BST was the words I was looking for. So London time, essentially, is what I'm trying to say. So just going to bring that back one candle. So at this point, okay, what we have, we can draw on our premium discount as well, just for a nice little bit of added confluence. So price came into this level of supply and it reacted, fell to put in a lower low and pushed to the upside, right? So we have a flip there, just going to draw it from the entire range reaction. And it also gave us a bullish chock there as well, just signaling that we're getting a bit of an internal pullback, okay? So these are sort of our 2 POIs now that we can look for sells. Obviously sells being the high probability position that we want to focus on, keeping it nice and simple, right? Following the trend. So we play the next candle, we can see that price pulled back into that demand range, that flip, the supply to demand flip, mitigated some orders, and then it continues to push up intraday, and then we come up to this level here, which essentially brings us to what we're looking at. Now, like I was saying, pre-session analysis kind of had it drawn in. I was kind of more focused on price coming up here. I wasn't too interested. But as price is coming into here, just after Frankfurt Open, obviously coming to London, this is the time where, I'm pretty keen or I like to look for positions. As usually I find that's when that sort of highest probability positions tend to happen for me, at least. You're trying to catch that European volume kicking in. I'm always 100% focused on the charts, sitting forward in my chair and looking to see what develops. So as price is obviously coming there towards that sort of time, well, I'm going to start to dive into this POI a little bit more. This is when I then looked on the 5-minute time frame, And it made a little bit more sense to see that actually a lot of supply, an overwhelming amount of supply, stepped into the market at this point, because you can see here, right? What do we have? We have this pretty clean level of demand, that obviously broke all of these highs, get the pen tool to work, and then led to that pretty strong move there to the upside. So that's a decent level of demand. Price came into that level of demand, provided a pretty obviously volatile reaction with that one candle, failed to break those highs, and then continued to the downside. So what do we have? We have a demand to supply flip there, right? So this is where supply came into the market to take control. So if you look at the extreme of that reaction leg, which is nested nicely within that M15 Doji POI, it's just adding some more confidence to, you know, a lot of supply came into the market. All right, we can also see this level flipped as well. So anywhere sort of within that box is going to be, yeah, a pretty decent level to look for potentially a continued movement, or maybe a little movement down into here. We can remove our risk or partial profits. Yeah, there's nice risk reward down into there before it may come for the extreme. Okay, so now jumping down to the 1 minute. My alert obviously goes off. We've come into this level. We also have M1 refine in here if you want to draw on. I'm not going to bother. So at this point, okay, what is the bare minimum I need to see for me to enter with a confirmation entry on the M1 from an M15 POI? As you guys should hopefully know, the bare minimum I personally need to see is a change of character on the time frame that I'm entering from, right? That's the bare minimum. So let's talk about kind of entry models for a little bit. I'm just going to rein in this POI. So we know, hopefully if you've watched the trade plan module, that the sort of highest probability entry model that I look for is a liquidation. So we build some form of equal highs ideally, right? Price then liquidates those highs, mitigates our high time frame POI. We then get price to come in, and then let's say we get a flip. Now I'm going to talk about, first I'm going to draw the highest probability entry model that I personally have and use with the most confidence. So we've had the liquidation, mitigation. We come into our M1 demands that obviously caused this move here to break these highs. We then react from the M1 demand, right? Now, this is the highest probability one. We then sweep this high here, so price pushes up. We then mitigate this extreme level here, and then we push down, okay? And then obviously we'd look for price to come back into this level to look to get short, and then we get the continuation there. So why is that the highest probability level? Well, we have just drawn this on quickly, and then liquidation of the highs, okay? Cool. So the reason why this is high probability is because obviously we have the liquidation, which is what we need for big money to use that liquidity in order to fulfill their sell orders, right? So they don't experience severe slippage. So we know if we see a liquidation into a POI, that can increase the probability, right? Then we have a mitigation, obviously, of our higher time frame POI. When they get a nice V-shaped reaction or the overall reaction, basically from here to here, we want to see that momentum before we're entering. That's all I'm looking for with V-shape. Don't get too caught up with the word V or whatever. We talked about this on the meetup on Friday. If you guys haven't seen that already, we just want to see momentum come in as those orders are being filled. We just want to see that overwhelming imbalance between supply and demand. That's all we mean by V-shape. Obviously, as it's supply, it's an upside down V. If it was demand, it would be like that. Not too bothered about how price comes into it. Just overall, we just want to see that momentum comes down, right? The V-shape comes from typically just you get the sweep of those highs and it gives you that overall kind of upside down V. That's what it comes from. But the reason why this is the highest probability also is because when we mitigate that level of demand, obviously we then fail to put in a higher high and then price closes below the reaction. So we have a failed reaction. So anywhere between the bottom of the reaction and the top of the reaction, so this orange box here, is where supply stepped into the market to take control, right? That's our demand to supply flip. Now, the reason why it's high probability as well is because when that reaction happened, it mitigated our extreme level of supply here. So then when we're then looking for our entry and we have our change of character here on the M1, there is basically only one area to enter from within, right? In terms of sometimes you'll get the flip and you'll have an extreme and then you have to make a decision. Am I going to enter on that decisional flip zone or am I going to enter on the extreme, right? And sometimes it's hard to tell which one it's going to go. So in this case, this is the reason why I love it the most, is there's only one level. You can only enter on the flip, right? Obviously, whether you want to enter on the whole range or if you want to enter, so either from the top to high, or if you want to refine that to the pivot candle, is up to you. But ultimately, that's the highest probability entry model we're looking for, okay? Just kind of wanted to go over that. And sometimes we do get a fair amount of questions. Now, for me personally, in my own personal trade plan at this current point in time, the only thing I need once I have a mitigation of that high time frame POI, that M15 POI, all I personally need to see as a minimum criteria is a chock. Once we have that chock, that will then have given us our supply zone, right? So imagine price comes in and then we just chock down now. What will I have? I'll then have a supply zone that I can enter from within. That's the minimum I need to see for a trade, and I could actually enter with just that criteria alone, okay? Because I've done the work to understand that this is a level in which I want to get short. So that M1 chock is literally just a timing mechanism to help me know that price isn't just going to carve straight up through here. Because otherwise I could just enter on here directly. I could just set a limit order, right? So that's why all I'm looking for at a minimum is that M1 chock. But that's obviously the lowest probability entry model I have. But it's taken me obviously a ton of time and experience to get to this level where I would know, when to enter with such minimal confidence on the M1, right? It's very rare I would enter on just an M1 chock without a liquidation, without a V-shape, without a flip, blah, 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 right? Ideally, I want to see as many of these pieces of confluence. The point I'm trying to make is those other pieces of confluence are just additional confluence for my entry model. Just the bare minimum I need to see is the mitigation and the change of character, okay? So it's up to you guys how much you want to see. The more confluence, the better. But obviously, you're not always going to get all of this confluence, right? A flip that sweeps, the liquidation, the overall V shape, right? You're not always going to get that. So it's going to be down to you to what you want to see. I just know sometimes we get questions. Well, in this case, I didn't enter because there wasn't the perfect liquidation, or there wasn't, a very super clean V shape. Maybe it was a little bit corrective, blah, blah, blah. Or there was a flip that didn't sweep, but that the flip played out. That's just part of trading. It's going to depend on you on how much you want to see, right? Okay, so I'll leave there. So my thought process at this point, okay, my alert's gone off. I'm waiting for at least this red line to be wicked before I can consider getting short. So let's play this forward a little bit. Okay, we're reacting from this level of demand on the M1. Right, why is that level of demand? Well, it's a level of demand because it's a bearish candle engulfed by a bullish candle that broke this high here. So that's a valid level of demand. Okay, so we're reacting from that demand. So at this point, I'm thinking, okay, we're probably going to continue up. Get this paintbrush to work, right? And push up a little bit higher, and then we'll maybe get our entry one. Okay, cool. And then I'll look to get short. So just being patient. I know I don't have to do anything until that red line is at least wicked. So we're reacting from demand. We're starting to now build these equal highs. Now, typically when this happens, obviously not 100% of the time, but typically when you get these nice equal highs like this, especially when it's the first initial mitigation into the zone, right on the distal, usually it's building liquidity to trap early sellers, right? Then you get the movement, and then we can look for that movement there, right? Or this would be the sweep of the highs, and then we'd go, right? Typically that's what happens. But as we play it forward, and this is what I was thinking was going to happen, right? I was just waiting for those highs to be swept, and then boom, right? You see that momentum come in. So what do we have at this point? We have a mitigation. We have a reaction to demand that fails to put in a higher high, and then supply steps in and takes control. So now we have our flip. So I'm just going to draw that on. We have our flip. Whoops. From the low to the high, right? You can take the whole range. Obviously, you can refine it to a single candle as well if you wish to do so. So we have mitigation, we have a flip, we have the chock, obviously, but a nice strong close as well. So we have demand failing. Now this could be a level to enter. Also, the flip does sweep liquidity because it takes out these highs here, which is a nice structural high because you have it's a bit harder to see, but price comes down, takes that low, then grabs the liquidity behind that high, and then pushes to the downside. For me, we also had the V-shape, okay? And what I mean by V-shape is literally just momentum kicking in. Rather than it just kind of like trickle, just barely break that low, right? Clear momentum at this point. The main negative to this, and the bit that was causing me personal doubt and a little bit of hesitation, was the way that these highs formed. It's kind of that very corrective highs. It kind of just rounded over. Typically, that's not a good sign, right? The strong highs are when you get that strong liquidation and then boom. That's when it's super high probability. That's what I would love to see, okay? So that was causing some hesitation, but then again, this is kind of what I want to bring your attention to is it's all about the work you have done before you've dropped down to the M1. The M1 is just that little timing mechanism to help you know that potentially this POI is going to hold, this blue box, and price isn't just going to shoot up straight through. Because that's what, otherwise, just why bother going on the M1? You can just set your entry order on this zone. Just use M15 entries or M5 limit orders, whatever you want to do. So when I see price turning with that momentum, am I going to overthink? Well, we haven't quite, it's left these equal highs. It could sweep those highs. Yeah, maybe. But overall, price is trending extremely strongly to the downside, right? Order flow is completely bearish. We've come into a M15 premium level of supply. Yes, maybe it's not the most amazing M15 POI in the world, but it's premium. It's flipped the level of demand. I'm going to keep following that momentum. Risk reward is decent to the lows, and potentially we know that pricing can keep trending. I'm more than happy to look for an entry short from here, especially with it's just a session open volume kicking in. Obviously, this is a very nice level of lower time frame flip as well, where we can see that reaction, and then boom, that's where the supply stepped in. So you have to weigh up the positive and negative confluence. For me at this point, this is what sold me as well, like that strong reaction from this level. If I take a loss from here, we go up higher, fine, I'll look for another entry. This is the type of area, pro trend, premium, everything's aligned. I just want to get involved at this point, right? You always want that excuse to get involved, to look for that trade. So it wasn't ideal that we had that, but it is nonetheless. Now, arguably, right, we did have this. I would personally count that as a liquidation as price comes in, liquidates those highs, has the mitigation, fine. The only reason why typically, or I wasn't, paying much attention to that as a liquidation is just because it left these highs that looked like, they want to be taken. Arguably you can say we do actually have that as part of the entry model there. It's just typically you don't leave highs like that. Just want to talk about that because I know there was a lot of hesitation and confusion around that, understandably, from a lot of you, which is absolutely fine, but this is the way I took the trade. So I spoke about this in a bit more depth, kind of my psychology behind this as this was happening. I spoke about it in the meetup on the 8th of July, so that is in the meetup section if you haven't watched it already, where I was still hesitating at this point. I knew I kind of wanted to get in, but it still plays those mind games with you, right, with human execution, where you're thinking, well, is it going to get taken? I'm still debating. You don't have that long on the M1 at this point. Price is starting to pull back. At this point, I'm still trying to fumble around and, debating, setting my limits. Price has already pulled back into the range. Then I'm thinking, oh, should I market execute? In the end, right, keep calm, set your limit order on the EQ, 2 pip stop above the highs. If I take a loss, I'll enter again, right? So then I think about here, I then set my order, and then price just tagged me in, very fortunately there, and then we move to the downside, okay? So, yeah, key takeaways from this is we didn't have the perfect entry model. If price had taken those highs, then mitigated like the M1 extreme, then we had got all of this, that would have been absolutely perfect, okay? But what I want you guys to do is just realize that we're not always going to get those picture perfect entry models. They're just there to kind of help us boost our strike rate. Ultimately, if you've done the work or you have the confidence in that POI, it's all about the higher time frames. The M1 is just a timing mechanism to help you know when to get in, and obviously also to help you to know where to set your order to increase your risk to reward, okay? Another thing as well is don't be afraid to just enter on the whole range, right? 3.5 pip, even 4 pip stop, right? It's insane risk to reward. You're going to boost your strike rate, probably not getting stopped out and missing less trades where they don't quite tag you in. So don't be afraid to do that also. Okay, so now I'm in a trade, and this is where I need to work on this a lot more. This is another big weakness in my trading, which is scaling in and looking for those continuations. Typically, once I'm in the trade, sometimes I'm not very focused on looking for that next opportunity, right? So at this point, what do we have? Well, we have price has flipped this level here, come into this demand and push down, right? So you could, depending on your risk rules, look to enter anywhere from within this supply range, right? So I'm just going to draw this here and let's see what happens. By the way, in terms of targets, obviously looking to target this over here. Let me just talk about that briefly. So for me, I always basically look to take at least 90% of my volume off around 10R generally, because that's the figure that just works for me and my psychology. So I know there's a very decent probability that we're going to come down and take out that weak swing low, but we're not always going to do that. I'm happy to take, like I said, the majority of my volume. Now, one thing I was cautious of was this unmitigated M15 pivot here, which was the extreme of the reaction leg of that supply to demand flip. However, when you have this situation where you have a range like this, especially quite a small one, and price had already initiated out of the range, come back and mitigated a lot of those orders and then continued to move. Very typically, these are not going to provide much of a reaction when price returns to it, because the majority of those orders have been filled, especially when it's quite close. Obviously, if you have a big, massive range like this, and then price just kind of taps the top of it and continues up, and then comes back down, okay, maybe you'll see a bit more of a reaction. But when you have a very small one like this, where it's only a few pips away from mitigating it, typically you won't see much of a reaction. Sometimes you will, sometimes you won't, but it's not that important. But the trade I was in, 10R, lined up roughly around with this zone. So that was another kind of confluence as to why I wanted to take off a lot of my volume here, rather than trying to target this low and beyond. Okay, so that was my thought process for the initial position. So going back down and just kind of talking about potential scale-ins at this point. So just going to fast forward price a little bit. Okay, so at this point, what do? We pull back up into that demand to supply range, right? That flip, this supply range here, you could refine it even a little bit more to these buy to sell wicks, right? So we come up and mitigate that level. Okay, now that's not something I would personally, look to enter from within. There's kind of no real risk to reward there. It's quite high. If you enter in the range, it's not really POI. Probably be looking more at that level there if you're going to look for it, or play another confirmation entry off that level. So we pull back up a little bit, and then we continue down, and then we basically have another M1 break of structure there, okay, which is cool. So if you look in the Photon resources channel, I'll try to link the post in the notes below this video. If I remember, David has posted a great breakdown of what we typically look for a continuation model, because continuations can be tricky. Yes, you could just look to follow M1 order flow, and as soon as we get a break of structure, just look to set an entry from, set a short order from within there, and that can work. But if you continue to do that all the time, most of the time you'll get your hands burnt quite a lot just chasing M1 continuations. Otherwise, it would be very easy if the market just always did that, especially on the M1, right, where it can be a bit more tricky, you get a lot more sweep of highs and stuff. So for the M1 entry model, you want to do it in very specific cases, obviously high probability areas where everything's aligned and a lot of momentum. So what we look for is, we want to see, typically, like this would be like the most high probability one. We want to see price come into, say, a level of demand, old level of demand to the left, because remember, old demand is just going to provide what? Reaction points for pullbacks for the continued bearish order flow. So we want to see a reaction from demand to the left. We want to see price then pull back up. Ideally, it sweeps some liquidity as it then comes into a previous POI up here, this previous level of supply, and then we get the break of structure. So then we can look for price to pull back into that level, and then that's where we look to get short from within here, okay? So I'm just going to talk through that again. Before we look to set a limit order or look to get short in a continuation model, ideally we want to see price react to a old level of demand, okay? Because we want to see basically demand failing and supply taking control. Ideally, we want to see that pullback mitigate a previous level of supply. Now, why is that important? Well, it's important because sometimes you can get a bit of a pullback, and if it doesn't mitigate a level of supply, let's say it was just this pullback here and then that continued down, and then you try to short from here, typically what can happen is price can run that high to mitigate the actual level of supply and then continue down. So we've found that if price in this pullback actually mitigates that level and continues down, then you're following that order flow, you're following that supply chain, you're following that series of mitigations, you're following the money, right? So that's why we want to see the pullback that you're then looking to short from. Ideally, you want to see it mitigate something, which is what happens here, right? Also, we have the flip here. Okay, yes, the M1 candle distal was already mitigated, so it's not the most picture perfect flip in the world, but on a lower time frame, if you clean it up in the 30 seconds, you can actually see that it did react from something there. So it reacted, pulled back up into this previous level, mitigated that level. What also do we want to see? Like I said, we want to see some form of liquidation, or ideally the flip sweeps liquidity, which is what we get in this case, right? We sweep the liquidity behind the high. Also, obviously nice momentum, and then we break to the downside. So now you could enter anywhere from within this flip continuation if you take the whole range, or you could refine it a little bit more to that candle. But even that was quite big, almost 5 pips. This is where I'd probably try and maybe refine it to the wick, but obviously you may not get tagged in, okay? So that's the entry model that we look for. We essentially look for a flip, mitigation, continuation, and ideally you want to see the liquidation as well, and then we look to get involved there, right? Rather than just, okay, price came in, came down, and then you want to get short from here. Of course those can work, but yeah, test it for yourselves and see how you get on. But this is the most sort of picture perfect continuation we want to see. If I could simplify it even more, basically you just want to see that supply chain. You want to see that continued order flow where price is mitigating, continuating, right? And then you can look to just follow that order flow. That would be kind of the most simple way I could really explain it if you want to start diving into those continuations, right? If you miss the initial move, or if you want to look to be scaling it, right? So let's see what happens. Price pulls back, comes into that level, doesn't quite come into that, right? So it depends on if you wanted to enter that, you'd have to have at minimum sort of about a 4 pip stop, okay? So now again, we can follow order flow and see if you want to look to get involved from within here, whether you want to take that whole supply range from the low to the high, or maybe you want to be a little bit more refined for risk to reward. Now, the other thing with continuations is you do have to be wary that you are chasing price further down the leg, and this is why it does get a bit more advanced, and you need to look left because there is a level of demand here. There's some M1 demand, so it's up to you whether or not you want to trade against this, okay? Or if you're happy to be a bit more aggressive and push to the downside. If we take a look at the M15, as I had a few questions about this, obviously as you can see it's fast forward a little bit here, which is annoying. It's the drawbacks of backtesting on TradingView. But yeah, there was this sell to buy candle here, which is a valid level of demand. It is demand, Because remember, all we need for a level of demand is just a bearish candle engulfed by a bullish candle. But is it a strong level of demand? Did it break any structure? No, it did not break any highs, because obviously we broke this high here, but that was caused by this bit. This candle here did not break any structure here. It's all one straight movement. We only get a high there. So it didn't break anything to the left, and it didn't flip anything. So this is a very, very minor level of demand that I'm more than happy to trade through, right? Overall, we're super bearish. We pull back into a level of supply. It's very likely that swing lower high is now formed, right? All systems go to target that low. So this candle would not put me off. This more so, yeah, this has a lot more going for it. It's a flip that led to a break of that high, okay? So that would be something I'd be a lot more cautious of trading against. Okay, but obviously at this point, price was not there. So yeah, this could be a continuation. I did not take this, but this may be just a good example of what you want to look at, right? And then this is where I had basically 90% of my volume taken off around 10R at this point. And then I had the last 10% around this level here. Yeah, I just got out at this point. I was happy to get out in case we had a bit of a steeper pullback. And also, I just personally suck at holding trades. So yeah, targeting the low, let's say you just target that week low, you've got over 14.35 there, and then basically another 10R there with that scaling. And then for those of you who were looking at the market at this point, it went on to basically tank another, I don't even know in the end, which was pretty painful to see. So I'm just going to pause that there. Let's see, I hate doing this because it's so dumb, but yeah, it peaked at over, nearly 50R there or whatever. So yeah, so only in trading can you make an incredible return in an extremely short amount of time. What was that? 10R in about, where are we? 26 bars, so about 25 minutes or so, and still feel like a mug. So obviously when I saw this, yeah, had to go take a little 5-10 minute walk away from the screen just to kind of blow off some steam. But it is what it is. But yeah, don't get too caught up in shoulda, woulda, couldas and drag your RR to like, I could have earned this, blah, 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 and think about the money and all this R and all that dumb stuff. Think about the bigger picture. Think about what is going to get you consistently day in, day out. Think about what you can do at scale on large capital, right? Because for the majority of you, that should be your goal. What are you going to be doing in the next 5, 10, 15, 20 years, however long you want to trade? Probably the majority of us are going to want to be trading X amount of capital. Are you the type of trader who wants to go for those home runs where you can catch a few of these trades, let's say a quarter, right, where price trends really, really hard? Or do you want to have kind of that smoother equity curve where you're not always trying to hit those home runs, but you're banking your profits, getting in and out, and keep that compounding effect taking over? For me, that's why I know 10R is that kind of that very, very tight sweet spot, which is, for me, I still consider 10R extremely high risk reward. And that is what works best for me. So yes, it is frustrating. Yes, it still hurts when you see that and you think about what could have been. But I would not get too caught up in the shoulda, woulda games personally, and I would focus a lot more on the lessons. Okay, high time frame POI selection, knowing when to put your finger on the trigger, like when to put your foot on the gas, when to go for it. When yes, maybe there are concerns, there is some negative confluence. I've been there so many times where I'm just thinking, well, it hasn't quite done this last tick of the box I want, or price could sweep those highs, then I'm going to kick myself if I take a loss here. But this is the game that you have to weigh up the positive and negative confluence and accept the risk. For me, I'm happy in this instance to take this trade because of everything overall. I've kind of I don't want to keep going on about it. The video's long enough here. I think you get the point. It's up to you, right? Maybe you want to be a bit more conservative and you want to see this high goes, fine, but you have to then accept that sometimes you're going to miss in positions like this. So the point, if you take one lesson from this, don't know how long I've been talking now, but this one recap, when you have a POI that the price has come into that you're pretty happy with, overall high time frame picture, the M1 is just that timing mechanism just to see price start to move in your favor. Once we had this candle here, I was sold, boom, I'm happy to get involved now. There's the trade, do your thing, right? Okay, cool. So yeah, hope you guys took some value from that. If you have any questions, as always, about this specifically, actually what I'd recommend is watch the recap from the 8th of July. It is in the meetup section. I'll take a look at that. If not, shoot your questions in Discord. Cheers, guys.